James, let's give your mic a shot here. I'm going to ask you to unmute. How about now, buddy?
Yeah,
Yeah,
it
you
should
just
be good
asked me.
now.
Okay.
Can you
Hi,
hear me?
James. Yeah,
Hey, how you
welcome
doing?
back.
Hey, thanks. Sorry about last time.
No problem. No problem. So, you have anything you want to share today? I mean, metals, I want to ask you, a lot has happened since you and I talked 3, 4 months ago. We had that silver move. We had the gold silver ratio collapse. Okay, these are your charts.
Yeah,
Um, what do you think? You think we completed it here, just a shade under $29 and we're on our way again? Or do you think there's more consolidation ahead?
I still think there's more consolidation ahead. I know that it seems like it might threaten 30 today. We'll see how this goes. But maybe I'm wrong. Maybe it goes beyond 30 and starts making a run. But I still feel like there's got to be a further dip for gold below 2,300 before this ultimately reverts and starts making its move back higher toward the second
Okay.
half of the year.
Okay, so that's like 2280. You have
Yeah,
the recent low in gold, right? So you're
yeah, I
looking
think
for weak longs to be taken out and then set up a buy. I have levels around 2240. Are you in that ballpark?
yeah, I think that's probably right, Dale. You basically need to have a sharp reversion down before we can kick off this next bull move in the second half. So I'm expecting later this summer to have a run down toward that level that we're talking about around here, 2,400 roughly would make sense to me. So
Okay.
that's probably in August or sometime late July we might see that, and then from there we'll see what happens. But there's got to be something that kicks it off. It won't be. I don't think it's happening just yet. That's all.
Okay. You think it could be geo related or financial related?
I think it's financial related.
Okay.
My guess
Lower
is,
rates?
yeah, there'll be lower rates coming, but for sure, I think the banking system still has trouble, and so we're gonna have some
Okay.
deflationary scare at some point coming up.
Okay.
But for the physical market, that's really good when that happens. That basically the highest volume of sales happened. When
Last March? Yeah.
SVB and all the other banks were going down, and we had the digital bank runs. That was the highest volumes of retail bullion sales in all time in North America. So I'm expecting we'll go through another cycle of that at some point, probably this year. I would think,
You,
just given how brittle the banking system is.
it's interesting, but I track both the regionals KRE
Mm-hmm.
and the money centers XLF.
Mm-hmm.
And the last week or so, the regionals have a better pattern, in my view,
Mm-hmm.
than the XLF, which are, the money center banks, the big boys. Perhaps there's going to be something coming out of Europe with these elections that there won't be the same type of unity to handle any banking problems in the Eurozone.
Yeah, I mean, the amount of banks that are going to be consolidated in this coming cycle with the oncoming CBDC system is going to be gigantic. And I don't think people understand how long and how big this process is going to be, but it'll play out over the next few years. And it should be pretty chaotic, and you'll have a lot of consolidation in the banking system.
Okay.
Um,
Do your clients ask you for who you think in the U.S. are safe banks, if that's not an oxymoron?
I use a credit union. I try and stay away from the banks that have big derivative trading
That's
allocation.
interesting.
Yeah,
I've
so
I've
I
heard
try.
that before from
Yeah,
Greg Marino or
yeah,
Marinero. Do you know what
yeah.
I'm talking about?
Yep.
He
Yeah.
says it's not fail safe, but it's better,
Yeah,
a credit union.
because you don't know on the derivative side who's betting what. There's, basically you just don't know. And at some point, I'm sure some of those bets are going to come to fruition, and the unsecured creditors of those banks are going to be, they're going to be in trouble. There's going to be large haircuts for people, I think, ultimately, because we basically pressed time out on the global financial crisis in 2008, and we haven't gone through the other side yet. And I'm expecting that's what we're going to have to go through to get to the next system.
What's the temperature like in the mountains of Panama? today?
Right now, it's a brisk 70, maybe 68. A little rainy this
Nice.
morning. It's
No, I think
raining.
he's talking about the soccer team, James.
Oh yeah, yeah. Did you root for Panama or the U.S.? Were you
You
conflicted?
know, I didn't watch, but I heard that there, it was a physical game and there was a lot of
Yeah,
beatings happening on the field. But
yeah,
it doesn't surprise me we lost in football Americano or in football soccer. We're
yeah.
not good at that sport, so
You know,
no
I saw some pretty good shoves in the trading pits in
matter.
Chicago. I never saw anyone get thrown off the floor for that. Um, anyway, so James, what you have a take on the dollar here? It's we're threatening a breakout. You have a vibe on what's going to happen, or you really don't care?
No, I get paid in dollars, so I care how the dollar's doing relatively. I think
Okay,
ultimately there'll be another in any type of deflationary scare. There's going to be another surge in the dollar relative to the rest of the world because it's really the lone choice out there. So, I mean, if you look at John Exeter's old pyramid that he drew in 1968, the very bottom base of the upside down pyramid that builds the financial system is gold, and then the next layer is the U.S. dollar. And so, I expect there'll be another surge in the coming deflationary scares that come. But the dollar's not it's not dead yet. No matter how many people want it to be dead, it's not dead yet. But it will be at some point. We're going to have to devalue it sharply, but we'll probably have to go through some crisis and some surging in the DXY before that happens.
well, what if the dollar has bear phase, which keeps commodities going, um, helps risk until the bubble really pops, and then you have the huge rally in the dollar. Could we intermittently between now and then have a dollar decline? And I know it sounds completely unreasonable, but something like a 120 euro and an 80-cent Aussie.
It's possible, Dale. I mean, that is definitely possible. I still think that ultimately you're going to get at least one more surge before we go into a secular bear that goes
Okay,
down to the worst of all time.
okay,
You could have a small weakness that comes up, a spell of weakness before that surge, and then that'll be the final surge in the dollar. I think you'll have
okay.
one
That'll
more.
break. That'll break. Things are breaking if that's happening
I think
everywhere.
so. And the speed of technology coming on, I just think that the people underestimate the M-bridge system and the CBDC system and all the change that's going to be happening in the next handful of years. It's just the speed at which things are going to change is going to be it's going to be epic in terms of flows and how things are traded and the lack of dollar being the intermediary, and that's going to have a long-term bearish push on the demand for dollars because it won't be used so much in terms of global trade settlement.
Can we, guys like you and me, be replaced by AI?
No, I think that's overhyped. I mean, at some point, AI is going to be integrated and it'll definitely disintermediate a lot of things. But I think right now it's not there yet. If you look at even the most cutting edge stuff, it's still kind of lame. I mean, to be honest, like there's some things about it that are great. Like you can, for an entrepreneur, you can do a lot of things very quickly using it. But
Yeah,
ultimately,
without hiring someone.
yeah, but ultimately, it still requires human touch and human, um, looking at details and making sure that things are fine. And I wouldn't use AI, for instance, to build a copy on my website. I might use it as the base and then go through it word for word with a human
Okay,
being with
okay.
care.
There's still not that
It's
level
still
of
not that great.
trust.
Yeah, it's still not
How
that great.
about quantum computing? Have you looked into that at all?
Not really. No.
Okay. I
Uh,
mean, it's exponential, the speed
yeah,
with
the
the
amount of
chips.
energy that all this stuff is going to require too is it's just I don't think people realize it's going to be commodity bullish in terms of all the inputs that are required for the energy that's going to that's going to be required to run all this stuff. So it all sets up good for metals and commodities as time goes on and energy.
So, chaotic U.S. election. James, is that why you're looking towards late summer for
Yeah,
moves to begin and going into the election? Have a lot of strength in gold.
Yeah, and especially coming out of it, I think, going into the beginning of next year, it'll be ultimately, the coming whoever wins it. Ultimately, the dollar has to be devalued because that's the only way we're going to be able to handle nominally paying off the promises we've made. That's the bigger picture of all this, is that the dollar relatively can't be that strong over time because we just have gigantic amounts of unfunded liabilities and debt that we have to pay off, and the easiest way to pay that off is to devalue the dollar over time. And we're going to do a repeat of kind of what happened with the British sterling. We're going to go through mega inflation.
Yeah, a guy named Martin Armstrong. Do you know who he is?
Mm-hmm.
He's comparing the U.S. to the Roman Empire, and the same type of things happen with
Yeah,
taking the silver. Huh?
we're just doing it quicker than they did.
Everything's faster now. Down is faster. So what about silver gold ratio? I know you were talking 50. We had a pretty good move in the gold silver ratio since you and I talked.
Yeah, the gold silver ratio, if you look at
Look at
like a
that.
five
Went
year,
from, yeah,
you
that
can
was a
see
big decline.
a pretty big decline. This huge red candle right here that broke. Whenever it breaks this hard,
Yeah,
typically you might have a month where it bounces like we are right now, but ultimately it signals something that could go back down toward the mid 60s, even possibly the low
50.
60s and below. But this has happened before. You can see these major breakdowns that have happened in the gold
Yeah,
silver ratio, and it typically basically gives a trend that silver is going to go in bull mode for a little while. It could go into bull mode for a year to a year and a half and get down in the 50s possibly before the next major bull that comes later on.
and that low there was a peak in gold, wasn't it? 2011.
Yeah, when it got down here, this is let's see the low that was in February into March.
Yeah,
I'm sorry, I'm looking at 20. This is the one
yeah,
that you're
that here.
on. Yeah,
Yeah,
basically silver got to 50 in April, in late April. It got toward
okay.
50, and the gold silver ratio went down to 33. And if you think
Yeah.
that was the 21st century peak of gold and silver, it obviously is not. And I think ultimately 33 is like a conservative target for where this is going to peak and low. It'll go beyond that, probably into the 20s before silver ultimately plays itself out and peaks in nominal price terms and value terms.
Have you noticed that the miners, James, aren't giving it back on days when Whammy Slammy or Sammy Slammy is hitting the gold market, that actually
Yeah.
the miners aren't giving it back like it did?
Yeah. So this chart, if you can see my screen, this is the miners since 2007. Basically, it's been better just to be long bullion and not to really be involved in the miners. There's only been a couple time frames where the miners have outperformed bullion and they've been short and sweet. 2009, 2016, 2018, and 2020. Those are the only three small times where miners outperform bullion. I think this is one of those things where you go back toward the old quotes of, you want a return of your capital and not so much of a gamble on a return of capital. You really want to
Okay,
have a foundation of bullion as your main
right.
bet for precious metals. If you're going to gamble in mining shares, go right ahead. But remember, it's a gamble and it can all be lost. So only put what you can afford to lose into miners. I think bullion is the way to go.
Yeah, because you really have to do a lot of due diligence if you buy individual ones, and you have to know the jockey, and you have to understand debt and balance sheets, and you're almost better off with a fund that
Yeah, and it's
diversifies if you're not
there's
an
a lot of
expert.
risk between mining collapses,
Yeah,
nationalizations, with
yeah, that's a
jurisdictions.
big thing.
Yeah, I mean, these are all things that can ruin any type of good mining shares that you may own. I mean, I, for instance, had one in a Russian mining share, and now it's being held with the Treasury. Like
Yeah.
I didn't move quick enough when they invaded Ukraine, and it got confiscated essentially.
Huh.
So that's a real thing that happens. It happened to me, and it'll continue to happen. I would expect there's going to be a lot of change in terms of mining shares and who owns what and all that stuff in the coming 5-10 years.
All right. So I know that your religion is precious metals. Are you an atheist when it comes to crypto?
Yeah, I don't gamble in crypto because I think Tether is a big fraud that's still waiting to come undone. And I think Tether was used a lot to pump those markets and make them more valuable than they really are. So I'm still waiting on Tether to fail. And so, yeah, I'm not really bullish. I mean, the one thing about Bitcoin that's good is that you can send, capital quickly and almost like an email, right? It's that easy.
Yeah, the
But ultimately,
portability.
yeah,
Yeah,
the portability of it is interesting. But other than that, I don't really have like a huge bull case for Bitcoin so long as the central banks are the ones who are not buying it and they're buying gold at record volumes of the last 3 years. I think that that's ultimately signaling the truth is that gold is the foundation of everything, not Bitcoin. And no matter how hard they market it as being digital gold, it's not. And central banks aren't buying it. And ultimately, they're probably going to squash it once they get their CBDC systems kicked on.
which party is more likely, or doesn't it matter, to institute a CBDC here in the U.S.?
Yeah, I don't think it really matters. I think the BIS is in charge, and they're
Yeah.
the ones who are going to call in the New York Federal Reserve. Or they're working together on the M bridge,
Okay.
and they're all in cahoots. And I don't care who's in charge in terms of
Right.
Republican or Democrat.
Parties.
They're
Yeah.
just going to tell them how it is, and they'll sign it off.
Do you think that we need a crisis, a recession slash financial crisis to get the public to buy into it?
Yeah, I think ultimately what it'll be is a crisis so big that people need stipends month to month just to pay for food and not riot. And then it'll be go ahead and download your US Treasury app so you can get your monthly checks. And that'll be like a 99% adoption rate because people want free money and they don't care whether or not it's coming through an app on the Treasury or not. In the end,
Yeah.
it works in a grocery store, so they're gonna download it to their smartphones.
How much to rent a house in your neighborhood?
The one I'm in is 800, and it's 2 bed, 2 bath. It's pretty
Yeah.
good. Yeah,
Okay.
it's. I'd say it's probably 2/3 of the price in terms of cost of living versus say like a Rust Belt city in the United States.
Okay.
So it's it's
I'd
it's
like, I'd like to get away for the summer. Anyway, I'll talk to you later. And James, let me ask you this for people that are still hanging on here.
yeah.
When they go to your company and say people want to start accumulating silver, gold this summer, as it declines, dollar cost average into it, can they work directly with you? And how would they do that? If they wanted to talk to somebody instead of like a lot of dealers, you just go to their website and you just do it online without being able to talk to somebody to guide them.
Sure. So you just would call our 1-800 number, and and there's trained staff that answer the phone, and you can talk and consult with someone there. It basically really the question that I'd ask someone is why are you buying gold and silver? What is the reasoning? And from there, if I listen to what they say, I can intuit whether or not it's really about capital preservation or is it really also
Spec.
about valuation gain? And so
Yeah.
the combination of the two is a question of how much should be in gold and how much should be in silver. Silver is going to be a wilder ride, but ultimately, if you stick it out and you have a timeline that stretches 5 years out, you should do pretty well with silver as well. But it's not gonna be straight line. It's gonna be a wild ride. So you have to kind of have a stomach that can handle it.
All right,
Uh,
I just got a question from Ingmar. Can people pay for precious metals with Bitcoin at your
yeah, we
company?
do. We do have that option with BitPay. So yeah, you can definitely buy gold or silver with Bitcoin. What we do is we just simply convert that Bitcoin immediately to cash to settle the
Okay.
trade.
All right. Well, good hunting this summer, James. Always great to catch up with you.
Oh yeah.
And I'll talk to you on the side. I may
All
take an
right.
airplane trip.
All right.
So, all right, James Anderson, everybody. Follow him on X at James Henry and why don't you show your 800 number again? When people call that number, James, can they ask for you?
No, I'm not. I'm not someone who answers the phone for on behalf of our
Okay.
incoming calls. But our staff is well trained. I mean, these people, this is what they take. They take phone calls
Yeah.
every day, all day. So
Okay.
you're going to get someone on the other end who's heard it all. So
Yeah.
don't be afraid to write down your questions and come with them. And my suggestion is, when it comes to stacking gold or silver, just just go with like the lowest premium products with the best brand recognition. So for instance, today, like 1 ounce silver bars at 99 cents over spot. That's a pretty good deal right there.
That is.
See on the gold side. I mean, I would go with gold products that are well known and well respected. So I'd go to gold coins. I'd probably, if I was in the US, I'd probably stick with gold eagles or gold buffaloes, or gold maples. You know, those are your three best options in North America, my suggestion.
Do you think there's going to be confiscation of gold here in the US?
No, I don't think so. They tried that in 1930,
Right.
33, and I went and looked at the data, and like the amount that they got back, it ended up being, because we had the data from the U.S. Mint, how many gold coins they struck from like the late 1800s until 1933, and I think something like 28% of it got turned in, and so like 3/4 of the outstanding gold coin never even got turned in. So it barely worked then. And my suggestion is they're not going to do that now, because that would be a real shitstorm in terms of that dollar weakness. I think ultimately what they'll do in a crisis is they'll just remark gold up, and they'll turn gold from 2,300 an ounce to 23,000 an ounce, and then issue bonds that have some type of gold lacing, and that'll give more credibility to the dollar again. And that's, that's something that they have within, they can do that at any point in time. It'll obviously take a long time though. We're going to have to go through hell to get there. But eventually that's probably what's going to end up having to happen.
Well, Italy had people that were in short-term securities, interest-bearing securities, converted them all to 10-year notes without them having a say.
Yeah, if you look at what the Federal Reserve's planning, I think they're gonna mandate that banks, carry 40% of their reserves in treasuries, and they may end up having to force U.S. citizens to have, a lot of their retirement funds go into bonds. And so both those are going to be very brutal, because we're looking at a secular bond bear market for the next decade or two. So they'll underperform inflation the whole time. It'll be, you might get 8-9% on your U.S. treasuries, but the true inflation will be twice that. And so that'll just be another way that they can devalue the currency over time.
Thank you, James. Great catching up with you.
Yeah, Dale. Good talking to you.
All right, James Anderson, everybody, and everyone have a great weekend. Remember, don't discount your coins, your currencies, whatever you think is valuable to you. Your most valuable thing is time. Time is your most precious currency. Make it count. And I'll be seeing everyone on Monday. Have a great weekend, everybody. You could join the team in 15 minutes for the morning edge, and get empty your next empty coffee can, fill it up with gold and silver. And I'll see everyone on Monday. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.